Well, JPMorgan has come out with this positive note on pharma sector, and they have stated out five reasons why one should be positive on the sector. Now, the first reason is they're saying that the India portfolio is likely to witness the highest price increase this year. Now, they're expecting a 12% price hike for the NLEM portfolio, which will highest in this segment, while for the non-NLEM portfolio, they're expecting a price hike of around 10%, which is allowed by the government. Now, if you see in the last couple of years, the margins of these pharma companies were squeezed on the back of pricing pressures seen in the US generic market, and also because of higher input cost. And now this is expected to reverse in the coming year, because the US generic price erosion has relatively moderated, while the input and freight cost have softened, and both these factors should aid the margins of the pharma companies in the current financial year. Now, the fourth reason is that they are seeing opportunistic gains in the US market arising on account of increased drug shortage and supply disruption, which should aid the demand for the Indian pharma companies. And the last reason is the valuations are reasonable. Now, if you see Nifty Pharma Index relative valuation compared to the benchmark is on the lower side, while the sector's earnings is expected to grow at a CAGR of nearly 20% over FY22 to FY25. Now, the two top picks for JP Morgan is Sun Pharma and Cipla. They are bullish on Sun Pharma on the back of solid domestic franchise, continued ramp up in specialty business, reducing generic exposure and reasonable valuations, while they are bullish on Cipla on the back of continued outperformance seen in the Indian market, strong traction seen in one of its key products in the US market, while the risk reward is also favorable after the recent correction, according to JP Morgan.